Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Mangalam, and from the entire team of Chartbusters, we're wishing you and your families a very, very happy Diwali. But we've got earnings coming in, Mangalam, so let's get straight to the management of Havells.
Let's get straight to the management of Havells. Let's talk about their earnings now. 12% growth is what we saw in their cables and wiring business, but there was an impact of unseasonal rains and extended monsoons on some of their cooling products. So we do have with us Anil Rai Gupta, who's the chairman and managing director of the company, joining in. Thanks a lot, Mr. Gupta, for joining in. First up, to you, your team, all your employees, and all our viewers, a very, very happy Diwali and festive greetings as well. Now, if we look at your numbers, it was led largely by cables and wires, as against earlier, where it was the consumer durables business, the cooling products in particular, which would be growth drivers. This time around, obviously, on account of the unseasonal rains, the erratic summers that we had, that business saw a bit of an impact. So just wanted to understand on that business in particular, what's your outlook for the second half of this year? Because on the one hand, there is a fair amount of inventory which is there with the dealers as well. And on the other, there is that additional kicker that comes in from the lower GST too.
Absolutely. First of all, happy Diwali to all of you and to your viewers. I think you hit the nail on the head. There is, summer products, we are expecting a very big turnaround because it was a low first half for the year. Summer products, including air conditioners, air coolers, fans, we're expecting good turnaround in the second half. There are inventories which are piled up both at the manufacturer level and at the trade level. I think it should get normalized during the third quarter and maximum by the fourth quarter. There is another disruption which is also happening. The energy ratings transition is also happening by 31st of December, which would mean better rating products for the consumers in the fourth quarter. GST reduction is a big advantage for the consumers. So all in all, there are pluses and minuses, but I think by the fourth quarter things should get normalized fully for the summer products.
How would you define normalized and how would you define a turnaround in the third quarter, sir? Because the retail offtake could increase, but the dealers are still sitting with a fair amount of inventory. So if you could give us a sense on your reported numbers, what's the kind of growth that we can foresee in the third and the fourth quarter?
So I think last year, third quarter was suppressed. So we are expecting some growth over the third quarter itself, despite the fact that the dealers are also with inventories. So I think, I would say that, the worst is behind us as far as summer products are concerned. Third quarter should see some growth, but fourth quarter will be a real turnaround.
All right. Hi, Mr. Gupta. First of all, wishing you, the team and the entire family a very, very happy Diwali. And as you said, you're bracing for brighter times ahead. So that's good news. That said, the past quarter, the cables and wires business, if I look at the growth, well, it was a little lower than actually what most were estimating, though the margins were a pleasant surprise. How do you see things pan out from here on? That toss-up between volumes as well as profitability, how do you balance the two? And also in terms of volume growth, why was it a little lower last quarter?
So two aspects to cables and wires. Cables, we have underground cables, which is part of the business, which is industrial in nature, where we have added capacity during the last year, and that capex is continuing even this year. So we're getting an advantage of some enhanced capacity in cables, so which is showing a very decent growth. As far as wires are concerned, if you remember, first quarter was a very high quarter for wires because of high inventory pre-stocking by the dealers. That led to some normalized growth in the second quarter. I think overall, if you see, the first 6 months for domestic wires business has been very good. So I think sometimes quarter on quarter things can vary in terms of growth because of fluctuating raw material prices. But overall, the trends are very positive for cables and wires.
Right. The trends are very positive for cables and wires. Mr. Gupta, how would you view, the margins in both the cables and wires business and as we move along the electric consumer durables business as well? Because for cables and wires, the street believes that maybe the raw materials are still on the rise from here on. Perhaps the lowest of raw material prices are behind.
Yeah, so I think, lower raw material prices is good for us because, one, not only from margin point of view, but from demand point of view. So it is on the rise. and hence, we do believe that the second quarter margins are a little bit of an aberration. We do expect 15 to 16% continued contribution margins in cables and wires business. But because of the enhanced capacity in cables, distribution reach for our domestic wires business, the brand orientedness, the innovation, I think we'll be able to maintain these margins in the coming quarters.
Okay, a quick word on Lloyd's then. As you're saying that you expect things to gradually pick up in the second half of the year, put it into context, give us some numbers, sir. How do you see things recover from here on?
I think, as I said, third quarter was suppressed last year. Fourth quarter itself was suppressed because we had a bad March with the independent range. So I think, if everything goes well, including despite the fact that inventory clearing would need some time, we do expect quite good growth in the Lloyd's business.
And across your segments, have you lost market share anywhere? If you could give us a sense, where have you maintained, where have you gained, and where could you do better?
I would say that Havells' continuous focus is always on not only retaining market shares in very strong segment, but also improving market shares. Even in ECD, where we have seen flat growth, we have seen market shares improve. Our PLDC share of business has gone up to almost 40% of sales. Appliances business continues to grow. Water heaters business continues to grow. The only effect, I would say, has been because of lower summer, which I believe is industry-wide. And hence, I don't think we have lost market shares in any business.
All right, Mr. Gupta, thanks a lot for joining in and giving us all of those details. Good festive season for you, personally as well as professionally. And we'll track these numbers at the end of quarter 3 as well. Thanks a lot for joining in. We'll tell you what, slip into a short break, come back. We'll be joined by the management of Hindustan Zinc. Stay with us. Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Well, let's shift focus on another earnings conversation. We're now joined by Mr. Arun Mishra of Hindustan Zinc to break down the company's past quarter's numbers. Well, Mr. Mishra, thanks a lot for joining in and good to see you in festive spirit. Well, let's focus on silver prices. They have outdone what gold prices have done, zoomed past that $41, $42 an ounce that we were talking about earlier. Where's it headed according to you? And how do the demand-supply dynamics shape up?
Is still there is a demand supply gap, and that is reflecting in the prices. And I guess there are three factors which are pushing this way forward. One is, of course, more and more application of renewable power. CBAM is coming in 2026. There is a push for most of the exporters to Europe to source renewable power, and that is reflecting in more and more production of solar cells and other electronics, which is having the more silver consumption. At the same time, I guess people are also changing their instruments of investment, and to keep their investment safe, more and more precious metals they are buying, which is reflecting in the gold prices as well as silver prices as tag along. And I guess the push will continue. So I will correct my forecast. What I had predicted by January 40 to 46, I am correcting it to 50 to 55. I think this push will continue till quarter 1 of next year.
Okay, half a century on silver. Good news. But when expectations are so high, why did you hedge silver at around $37 an ounce? Hedging strategy, sir, seems to have boomerang this time around.
The hedging is always, it will give you pluses and minuses, but you have to see it hedging as over a longer term. So hedging is now not to be seen in every transaction. As a transaction, sometimes you may be into loss and you may be into gain. We could predict a price of $37 a ton because my guess, as I had told you, was $42, $44 or $46 in January. So, but it crossed much before that. But fine, so be it. We will also look at future options as it moves.
All right, fair point there. So be it. At times you lose, at times you win. That's the benefit of hedging and the risk of it. But when does this hedged capacity get fully exhausted?
Well, I think open quantity is 131 tons this year. I think by next year it should get consumed.
All right. By next year, it should get exhausted. What about zinc? How is the demand given uncertainty globally and the impact on zinc prices then?
Zinc prices are up, and I'm sure it will remain at $3,000 to $3,100. I had predicted by December $3,000. It should go up to $3,000, $3,100, not beyond that. And this will also continue because whenever there is a push on precious metals, also the people start investing on some of the base metals for people to hold on to. And as of now, looks like this pressure will continue. And yes, we are seeing good demand, not only in India, also abroad. And Chinese economy is picking up. Their smelters have started producing more. And yes, this will continue.
All right. What about silver production? The guidance out there continues to lag behind schedule. Are you optimistic that it ramps up?
No, so we have taken, if you look at the silver guidance of 680 tons, and in the first half we have done only 293 tons, that means we'll be producing more than 380 tons in H2. So that is after a lot of effort in prioritizing mining areas where there is more silver. At 380 tons, if we manage to produce in H2, it translates to 760 tons per annum kind of a capacity, which we have never done earlier. So yes, we are putting all bets in one place to produce more silver. That will do. And as far as production is concerned, in H1, we slipped a bit on zinc production, primarily because of one of our new roasters, R6, which was to be commissioned earlier by February or March, took time. And because of that, other shutdowns came in, and then we had a, so we are running sort of calcine. And so that has impacted. Nevertheless, those shutdowns are behind us. We will produce at the peak capacity in H2 and come to a number of 1,075 KT of metal production, which again itself is more than about 500 KT production in H2 itself. So that gives us a more than 1 million ton capacity again.
Mr. Mishra, you have been talking about scaling up towards the 2 million tons odd mark. What's the progress on that? Till now, I think you've announced around 1.45.
I think by next month we will be able to announce, because our consultation with the designers is complete. We exactly know what design, what to do. Only we are waiting for various commercial offers to kick in. Once we get the commercial offers are frozen, by next month we should be able to announce further 650 KTPA smelter. 650 KTPA smelter will consist of 450 KTPA zinc smelter and 200,000 tons per annum of lead smelter, and also expansion of mines. So those will also have their own expenditure. Putting up new concentrator plants, that will have its own expenditure. So all that as one go, we will announce by next month.
Well, the cost of production actually has plateaued out. That's the sense that we try to get. Do you think there's more to go though on the downside, because it's come down substantially?
No, it will continue because we are just at around 19% renewable power, and by the year end we should be at 25% renewable power, and that should see us even going down the path from $994 a ton to towards the direction of $950 a ton. So this push for lower and lower prices will continue. And since in H2 we will produce more, so there will be more spread of fixed costs. So we will see the costs coming down while we produce more in H2, and that should push up the EBITDA level even further.
Mr. Mishra, silver prices have run away. You all have been talking about this unlocking of value. Don't you think it's an opportune time now to go ahead and unlock value, separate businesses in Hindustan Zinc?
Absolutely, absolutely. I have been quite vocal on this, that Hindustan Zinc must be demerged into zinc-led company and silver company separately. We are again taking it up with all the board members. And had we done this a year back, by now we would have reaped the benefits of very high market cap of both these companies together.
Take that point entirely, but you had hedged it at a price much lower than the current price. So, we would have had an impact of that on the market cap as well. But be that as it may, we take your point and wish you and your family a very happy festive season as well. But it's all about managements, right? We have JSW Energy as well. Sharad Mahindra, who's the Joint Managing Director and CEO of JSW Energy, joins us to discuss their quarter. Thanks a lot, Mr. Mahindra, for joining in. Festive greetings to you as well. The demand in the second quarter, it looks like, there was still some untied capacity. How did merchant prices pan out, and what's your outlook for the remainder of this year?
The demand, definitely, we have seen overall basis. Quarter one, if we start with, there was a negative demand growth of almost 1.6, 1.7%. But we have seen a uptick in quarter two. When there is a quarter on quarter, in quarter two, there is a demand growth of almost 3.3%. With, of course, volume slightly reduced. On a H1 basis, there is a positive growth of 0.8% in terms of demand. We have to understand some of the factors which have resulted in this. This time it has been an extended monsoon, which has been close to five months. It started sometime towards the end of May and continued till end of September or beginning of October also. So it has been almost an extended monsoon across the country. So these are the factors which have been, but quarter two has clearly demonstrated that the fundamentals remain strong, and going forward in H2 we see further uptake in terms of the demand growth. The tariffs, what has been witnessed during this quarter has been 3 rupees 93 paisa average, which is definitely lower, and which is purely a demand supply situation.
Well, operating profit growth actually, sir, was subdued despite higher organic growth. Explain that to us.
If you see, first we have to see the EBITDA growth, what we have seen. And EBITDA growth clearly reflects in terms of the impact of greenfield new capacity additions during this half of the year and this quarter. And also the increase in thermal generation, which has been a mix of, one is the KSK acquisition, and also the Ind Bharat Unit 2, which was available for full year, for full entire half year of this year. In terms of the net profit, we have to understand that lot of capitalization, one, that we have acquired KSK Mahanadi, for which we have made the entire payment. And also we have capitalized on the capacities which have got commissioned, which has resulted, if you see the total gross block, in terms of the total assets which we were having, if I go a year back, which was maybe in the range of almost maybe 60 odd thousand crores, we have added 49,000 crores of assets during this last 1 year. If we compare with September 24, taking the total asset value in excess of 113,000 crores. So all this entire 49,000 crores, which has the incremental asset, is a mix of the acquisitions and mix of capacity utilization, which has resulted in higher interest. And we have to remember that this is during the year phenomena, and these investments have not given us yet the full year annualized basis when we see the returns, which will come and stabilize in terms of going forward once this asset completes. We have paid full, but we have earned partial period only from these assets. So this is the result, which is temporary, but all the more important is with that, because of that reason, the depreciation, the interest above value has gone, resulting in a slight negative growth in net profit. But if you see, the cash profit has seen a significant growth, which is more important for us in our business, which is again supporting us in our future growths. So all these things put together, the cash profit is more important, which has shown a growth of more than 27%.
Throw some color on the new assets, the acquisitions as well, particularly KSK Mahanadi as well as Ind Bharat Unit 2. How are they panning out?
See, first and foremost, to start with KSK, it has been a wonderful acquisition. Whatever assumptions we had made before acquisition and paying the value for the asset, the first 6 months we have been able to complete, and asset is performing excellent with availability. Significant improvement if we compare with last year H1 performance. And though we don't feel that is the real benchmark to compare with, it is our own internal plans what we had made, we compare with that, which are significantly higher than the performance asset has given last year when it was under the CIRP process. Our plant availability has been in excess of 97.5%. The PLF actual has been in excess of 76-77%, almost 10% or more higher than what it performed last year. Lot of operational efficiencies we have brought in terms of negotiating the lot of O&M contracts and setting up the better practices, the best practices in our plants, in this plant, which has resulted in a significant reduction in operations and maintenance cost also. All these factors have definitely played out extremely well. We are confident about this asset going forward also. In terms of Bharat, the second unit, yes, which we commissioned in the month of March of last fiscal, has performed extremely well. This is a open capacity in the current year. Full capacity is open in the merchant. Despite the lower tariff discovery in merchant, despite lower demand, because of the low fuel cost being at the close to the mine pit and with significantly lower fuel cost, we have been able to run this plant. Of course, the generation which has been witnessed in Q2 may be lower or the profitability may be lower. It is only because of the planned annual capital shutdown of the units, because we have commissioned just in last 6 months to 1 year, and the units have to be shutdown is to be taken to fine tune the units, keeping in mind the scenario of extended monsoon, lowered demand and tariffs. We have taken the shutdowns of both the units during this quarter, which was planned was that 1 unit in H1 and 1 unit in December, that is in H2, to take advantage of going forward in the balance 6 months period when the demand is definitely expected to be better than what we have seen in H1. So this plant also is going well in terms of what we have expected.
What about the O2 power platform, sir? How's the performance for that scaling up? And if you can quantify a few targets for us, please.
See, O2 Power, when we acquired this portfolio in the month of April, with an operating capacity of 1.34 gigawatt, out of which 270 megawatt was wind and the rest was solar. We have been able to take this platform on September end, Q2 end, at an operating capacity in excess of 1.8 gigawatt. These are the greenfield commissioning which we have done post-acquisition. This is one platform. Of course, we have to remember that this is a solar-dominated portfolio, whatever is operating. And we have seen the extended monsoons when the radiation levels have been comparatively low at country level. The solar PLFs have been same or slightly lower than what it was seen last year. And this is a normal phenomenon normally in the case of solar when H2 is better than H1. But this time, because of the extended monsoon, it was slightly even lower than what was expected. So we expect going forward that the performance of O2 platform will be better than what it has been seen in H1. And we are sure that the capacity by year end, we will be reaching somewhere in the range of 2.2 to 3.3 gigawatt of solar of O2 portfolio. So it means almost close to a gigawatt of fresh capacity will be adding post-acquisition in the current year only.
Take that point entirely. Thank you so much for joining in and giving us an outlook. We wish you once again and your team a very happy festive season. With that, we're out of this time on this edition of Chartbusters. Thank you so much for watching. From Nigel, me, the entire team, once again, wish you a very happy Diwali. Stay tuned. The team of Trading Hour comes up next.